a stock that didn't do so well today and has kind of been on a losing streak. And that's Palo Alto Networks. This company provides cybersecurity solutions. And I think this space was a little overheated. I actually shorted CrowdStrike in 2024, did really well, had about a 50% return on my short position. And it was over the course of like 10 days because I caught it right before they had that big blunder where they had a very bad piece of code get out to customers and really disrupt a lot of customers. It was a really bad scene. But in the space, these are software companies. And I don't doubt that their software is important. I don't doubt it at all. But these companies are just really expensive. This one here is $113 million market cap. When we look at the stock, it's in general been going up. It's up 19.4%, but it's had really good volatility. You can see that it dropped here by 11, 12%, 14% actually. And more recently, it's really dropped about close to 15%. What's going on? How come they're dropping so much? Well, I think that their stock price is a little expensive. Let's take a look at their fundamentals and see what analysts have been saying. And where my thinking was, I just closed out a short position on Palo Alto today. I made 12%, I think over 2 or 3 months. Now, the PE, forward PE for 2025 on Palo Alto is 53. Immediately, that's a high PE. When you look at the average, stock market's probably at a PE of 26. Now, if this is a really high growth company, they deserve that PE. We'll see where the growth's at. Analysts think it's a little discounted. I disagree with them. And I'll show you my analysis in a bit. So these guys are growing 15%. That's a good growth rate. It's a good growth rate. It's not a great growth rate. It's not like, hey, NVIDIA, which is growing more than 100%. That is awesome. That's great. 15% is good. Now, they are a pretty good sizable company at $8.3 billion in the trailing 12 months. They do have good margins. They do have good free cash flow. Their margins, their gross margins are 74%. Free cash flow, $3 billion. It's very good. For a company like this, I'd probably pay 20 times free cash flow, maybe 30 times free cash flow. And maybe at 30 times free cash flow, this ends up being about $90 billion in market cap. Well, they're north of that by a sizable amount. Now, I still think based on free cash flows, they're overpriced. The earnings per share will show that the company is expected to exceed, their current valuation based on earnings per share. But I use free cash flows as the principal valuation method. And based on their current stock price, I think they're overpriced by 12%. So I closed it out. I think I made a little bit of money. And this one, I think, can maybe settle down a little bit more and get to a better valuation. But Palo Alto has been giving up some gains. And this space has not been an automatic winner over the last 12 months. If we look at Palo Alto and we look at CrowdStrike, they've seen a lot of volatility, especially CrowdStrike, right? Over the last year, CrowdStrike had the fiasco here around July timeframe. They really dropped. So if you're a CrowdStrike stockholder, you're doing well for 1 year. But this volatility, I would say, I wouldn't be surprised if we see more volatile times where you see the stock drop a little bit more. Palo Alto is up 19%, and that's after giving up about 14, 15% in the last 45 days or so. So when's CrowdStrike going to take this dip? I don't know. I think CrowdStrike is a little expensive. I think they're 41% overpriced. Their free cash flows are okay, but they're not great, and they're not growing very quickly. Their earnings per share doesn't support their current stock price. So this one here is one where I think it is overpriced. CrowdStrike is. We'll see how the market treats it. But we're in a market where we're beginning to see some stocks being sold off. I think they've been really bid up by investors buying into stocks and making the stock prices really go up. CrowdStrike, I think, is a stock that I'm going to continue to follow because I think it's a good one to short from time to time. Now, shorting stocks is incredibly risky. I only do it with small scale. If anything, I just do it because I think it's interesting to see if I was right or wrong. And I'm probably going to short CrowdStrike again and try to make some money. But we'll see. That's my opinion on CrowdStrike, as well as Palo Alto. The stock that I do believe in that space is Zscaler. I think Zscaler provides a good proposition to investors. It's been doing well over the last couple of weeks, and I think it's discounted by 34%. So not all stocks in the security software space are overpriced, I think Zscaler is a pretty good investment. And I've been beginning to accumulate some shares of Zscaler. All right, so we covered Palo Alto, one of the losers of the day.